Today's question comes from Tom in Richmond, Virginia. And he says, "Hey, Hobart, how can I build a dividend strategy for retirement? And what are the pros and cons?" Tom, great question. You see, a dividend strategy, it's all about investing in stocks that pay consistent dividends so you can create a steady stream of passive income in retirement. Now, that sounds great, right? So let's dive into how it works and whether or not it's the right move for you. So first, what is a dividend strategy? When you own dividend-paying stocks, you receive regular cash payments, usually quarterly, just for holding the shares. Now, these dividends can be qualified dividends, which means that they're taxed at lower capital gains rates, or they can be called ordinary dividends, and that's taxed as ordinary income or regular income. Now, the goal is to build a portfolio of high-quality dividend stocks that provide reliable income that still allow the stocks to grow over time. Now, what are the good things behind a dividend strategy? First, tends to be steady income streams. Even if stock prices fluctuates, which we see that they do, you still get paid. It also helps offset inflation. Many companies increase dividends over time, which helps your income keep pace with rising costs. There's also some tax advantages. Qualified dividends are often taxed at lower rates than ordinary income. Plus, you get compounding power. If you don't need the income right away, all you have to do is reinvest those dividends and supercharge your portfolio growth. Really awesome. Now, sounds too good to be true. So what are the cons? Well, dividends aren't guaranteed. Companies can cut or suspend them during tough economic times. Now, over-reliance can also limit their growth. Focusing only on dividend stocks may mean missing out on faster-growing opportunities for you. The other thing is market risk still applies. Just because a stock pays dividends, it doesn't mean its price will not drop. So the question is, how do we build a smart dividend portfolio? Well, first, diversify across sectors. Look for strong dividend-paying companies in different industries, things like utilities, healthcare, consumer staples. I want you to focus on dividend growth stocks, companies with a history of increasing dividends, like dividend aristocrats is what we call those. Now, I also want you to think about balance it with other assets. A good strategy includes having some bonds for income and cash reserves to keep income stable. Also, consider reinvesting dividends if possible. This helps you grow your income over time before you start withdrawing. So the question, is it right for you? Well, Tom, if you want passive income with growth potential, dividend investing can be a great fit, but it works best when combined with a well-rounded portfolio that includes other investments for stability. Now, maybe you're thinking about using dividends for retirement income yourself. Drop a comment below. Let me know what you're thinking. And if you've got more questions like Tom did, send them my way. Don't forget to like and subscribe for more retirement insights.